Hi, it's Professor Ted Stephenson, and welcome to the Money Masters mini lesson on Bollinger Bands. Sign up at moneymasters.com, where you have the chance to join the free academy, where you have a guided path to financial literacy, or you can join the free arena, which is a fantasy stock trading arena with a chance to win real rewards. So come on, let's get started by taking a closer look at this chart for the SPX, the S&P 500, 3 years from February 22, 2019 to February 25th, 2022. Okay, if we look at this chart for 3 years, we can see that in general, on average, there's been a strong upward trend to the S&P 500 for the last 3 years, except for this big dip that happened back when COVID was just starting to hit North America around March 2020. But one of the interesting things that we're going to zoom in on is that we can see that the S&P 500 hit a high right here, which really sort of incidentally is the end of the year, December 31st, 2021, where the S&P 500 was hitting new highs. Since the beginning of the year to date, the S&P 500 has been on a bit of a downward trend, and that's what we're going to zoom in on. So if we look at this next slide, we're looking at the SPX, that's the ticker symbol for the S&P 500, from December 31st, 2021 to February 25th, 2022, which is year to date. So if you're going to the COIFIN and you're choosing selection for your chart, this was just year to date, okay, since the beginning of the year. And again, we can see that the market closed on Friday, February 25th. The S&P 500 was down 8% year to date. But what is interesting is if you look here on Thursday, the market actually closed down negative 11.34% on the year, and that is considered to be a technical correction, okay? So what is a technical correction? A technical correction is a fall in the market value by 10% or more, but not more than 20%. A technical correction can apply to individual assets, such as stocks, bonds, commodities, or to stock market indexes, such as the S&P 500 index that we were just looking at. If the drop exceeds 20%, it's considered to be a bear market. So if do you want to learn more? Sign up for the free academy. And for example, in level 8, Trading 103, you can learn a little bit more on such topics such as technical analysis, types of charts, bar charts, candlesticks charts, and charting in general. So getting back to some technical indicators, the topic for this video is to give a little bit more insight on the Bollinger Bands, okay? What's important to understand is that there are many different technical indicators. In this video, we're just looking at the price-based indicators, which is the moving average and the Bollinger Bands. Okay, so in this chart, we're looking at the S&P 500 for 1 year. It's from February 24th, 2021 to February 25th, 2022. The blue line is just the price line for the S&P 500. So we can see the S&P 500 closed on Friday, February 25th at 4,384.85. The red line is the 200-day simple moving average. And as we can see here, this is basically the end of the year. In the last few weeks, the S&P 500 price line has been crossing back and forth of the 200-day moving average. But if we look at the 50-day moving average, in fact, the price line crossed from above to below the 50-day moving average around January the 13th. And that would be considered to be a sell signal. So if we zoom in on the S&P 500, just in terms of year to date, there's two things that we're going to see. Number one is there seems to be some sell signals if you're going to rely on the technical indicators of simple moving average and the rule where the price line crosses from above to below. And as I mentioned, you can see here on the 200-day moving average, it's kind of clipping back and forth. And the second thing to realize is that there seems to be a downward trend starting since the beginning of the year. And the Bollinger Bands are going to help illustrate that perhaps a little bit more clearly, okay? So moving on to the next slide, Bollinger Bands. Bollinger Bands are a tool developed by a famous trader, John Bollinger. They are a technical analysis tool that consider two standard deviations, one positive and one negative, away from a simple moving average of a financial security's price. And again, that can be an individual security or an index. So the chart has three main lines: the simple moving average of the price, and the upper band and the lower band. A good reference is at fidelity.com Learning Center. They have a pretty nice article actually on Bollinger Bands that if you want to have it explained in a little bit more detail than this video gets into. Okay. In short, Bollinger Bands are a popular technique that are used to identify price volatility in the market. The more the prices differ over a set period, the larger the space between the upper and lower bands. If the space is smaller, this means that the market is stable regarding the asset's price. As a result, Bollinger Bands are used to identify possible opportunities, but they do not indicate whether the trader should buy or sell. So they say that a picture is worth 1,000 words. Let's just move on to the chart. So this is the same price line in terms of the blue line. This is the S&P 500 for 1 year from February 24th, 2021 to February 25th, 2022. Okay? So starting off with the simple moving average, and in Koifin, when you choose the technical indicators of Bollinger Bands, it comes up with the 20-day moving average. Okay, so my previous chart was showing the 50-day moving average. Now we're showing the 20-day moving average. So the lower band is the minus 1 standard deviation of the stock price, and the upper band is the plus 1 standard deviation in terms of stock or index level. Okay, so we can see in times of volatility, here was the sort of sharp drop at the beginning of this year, the bands open up. So there is this wider space between the bands, where we can see that throughout the summertime, sometimes a typically quieter time in the markets, that the distance between the upper band and the lower band is quite tighter. Okay, so there's a couple of rules here. It says that approaching the upper band is a bearish sell indicator. So again, if we pick a spot along here, we can see that the price line is approaching the upper band. What seems to typically happen is the price starts to drop. So it can be used as a bit of a sell indicator. And if we pick any spot along here, again, here back here, the price line is touching the upper band, and we can see that the price line starts to drop. Similarly, if it's approaching the lower band, it's a bullish buy indicator. So let's have a look. We can see here the price line. We can pick some spots along the way. Price line is hitting, coming close to the lower band. What seems to happen after that? The price is rising. Okay, so those two rules. Approaching the upper band is a bearish sell signal. Approaching the lower band is a bullish buy indicator. Okay. And then a couple of things here. We'll start with this one first. A significant breakthrough of the lower band is a bearish indicator. So if it actually breaks through, we can see here at the beginning of the year, the price line broke through the lower Bollinger Band. And indeed, there was quite a drop. And in fact, there's been, a technical correction as of February the 24th, 2022. So it broke through the lower band sometime in January, and later on we can see here that indeed we are into a technical correction. Similarly, if there's a significant breakthrough, of the upper band, it's a bullish indicator. So we would start to see the stock to really rise up. We can maybe see that a little bit back here. Broke through the upper band, and there's a bit of a stronger rise, a bit of a bullish indicator. Okay. So that's simply the Bollinger Bands. It's a fairly easy concept. Again, there's 3 lines. Let's start with the middle one. It's easy to understand. It's a simple moving average. And again, if we look at the 20-day simple moving average, you can see since the beginning of the year to date, there seems to be a downward trend starting. And then the 2 lines, upper 1 standard deviation of the stock price, and the lower one is minus 1 standard deviation. So standard deviation is a measure of volatility. We can see here, not as much volatility throughout this time. The lines are much closer spread together than they are over here since the beginning of the year. A little bit more volatility in the markets, and the bands are spread further apart. Okay. Don't forget to sign up at moneymasters.com, join the free arena, and I hope to see you in the arena sometime soon. Chart links for the videos are always included below, but for this one, just because it's teaching a little bit of a skill, just going to show you how I bring those charts up. So type in, here I am at the Koifin app, I type in SPX, and I'm going to click here on the S&P 500, and it gives us some choices, price and volume, which is easy to understand. The other one I always use is the performance graph down here. But in this case, we are going to use the technicals. So we click on here, the technicals. It's going to bring up a couple of different selections. I'm going to click off the rate of change one day, which is volatility, relative strength indicator. I'm going to take off the 200-day moving average, and I'm left with the Bollinger Bands. And again, we can click on the 1-year chart. And some of the things that I just changed just to make the chart look a little bit different is that the price line is showing candlesticks. I'm just going to change it to a simple line and change that color to a brighter blue. And then on the Bollinger Bands, the upper band, I made a red, and on the lower band, I made it a green, or vice versa. On the 200-day moving average, the 20-day moving average, I made that a yellow. Okay, so that's simply, and then the neat thing that you can do here is this is how I get my links. I click here, share. I generate the share link. I copy the link, and that is the link that is always in the slide and provided for you below. You can click on that link and bring up my same chart. So that's just shows you how easy it is to use some of the charting features in Koifin, and hopefully that helps you start to better understand the markets a little bit better. Okay. This is Professor Ted Stephenson saying thank you for taking the time to watch the Money Masters mini lesson on Bollinger Bands. Thank you and have a nice day.